So there are a few entities in this case study. So for the paragraph 1, we have inventory control clerk and also production division. There are a few activities in inventory control clerk. The first one is inspect inventory records weekly to identify items below the order level. Second one is receive special order records from production division. The third one is refer to suppliers record to identify supplier for reordering, and then prepare purchase orders in duplicate copies, and also send original purchase order to supplier and copy to receiving clerk. And the last one is file special order request by order date. For the production division entities, send special order request to inventory control clerk. In paragraph 2, we have receiving clerk, which is receive deliveries from suppliers, compares received goods and quantities with packing slip and purchase order copy, signs purchase order copy if no discrepancy found, forward verified purchase order to accounts payable clerk, prepares manual receiving report based on packing slip, attaches receiving report copy with good received to inventory control clerk. And lastly is files packing slip by receiving date. And for the supplier, we have delivers goods with packing slip. In paragraph 3, we have inventory control clerk, which is updates inventory records on PC based on receiving report, move inventories to secure storage area, forward special order requests directly to production division, and lastly files receiving report by date. For paragraph 4, we have accounts payable clerk, receive verified purchase order from receiving clerk, temporary files purchase orders by supplier name while waiting for invoice, matches supplier invoice with verified purchase orders, reconcile invoice details with purchase orders, record supplier invoice into centralized accounting system, and lastly is files purchase invoice and purchase orders by invoice due date in open invoice file. For the supplier in paragraph 4, we send invoice to company for payment. For the centralized accounting system, validate data entry and record transaction into purchase transaction file, and also update program post transactions to account payable master file and general ledger master file. In paragraph 5, we have accounts payable clerk, which is review outstanding liability every Monday, takes out purchase order copy and invoice that are becoming due, entries invoice detail into centralized accounting system, forward cash disbursement voucher to cash disbursement clerk, file process invoice and purchase orders by supplier name. For the centralized accounting system in paragraph 5, we create voucher register file and also produce cash disbursement voucher from voucher register file. And lastly is for entities cash disbursement clerk in paragraph 5 and also 6. We prepare two-part check, keeps blank checkbook, approve and sign negotiable portion of check, must check to respective suppliers, keeps payment details into centralized detail, and lastly is files second part of check with cash disbursement voucher by payment date. On this slide, we have a context diagram that represents the purchasing and cash disbursement system of ED Autopart Sedan Berhad. In the center, the main system is shown, which is ED Autopart Sedan Berhad Purchasing and Cash Disbursement System. This is the system that interacts with all external entities. There are three external parties connected to this system, which are production division, accounting system centralized, and also supplier. For the production division, we send special order requests to initiate purchases. And for the accounting system centralized, exchange transaction data with the purchasing system. And for the supplier, receive purchase orders and checks, and in return sends packing slip, invoice, and goods. So this diagram gives a high level view of how data and documents move between the internal system and external entities. It helps in understanding the system boundaries and major interactions. So this context diagram simplifies a complex process into a clear overview, which is useful for both system analysts and stakeholders.
So good day everyone. So today I will be explaining this data flow diagram DFD of a purchase system. So this DFD represents the flow of information and the key process involved when an organization makes a purchase for its inventory. So the diagram helps us to visualize how documents, data, and responsibilities move from one department or entity to another. So in this diagram, we can see that there are four main processes involved. So which is for the first one is check inventory and special order request. This process begins when there is a purchase requirement and the inventory records and any special order requests are checked to determine if a purchase order is needed. And then the production departments may also forward a special order during this process. So process number 2 is prepare purchase order. So, if the items are required, a purchase order is prepared, and then the original purchase order is sent to the supplier, while the copy is forwarded to the receiving clerk for the reference. And then process number 3 is receive and verify goods. The supplier sends the delivery along with a packaging slip. So the receiving clerk verifies the goods received against the purchase order and packing slip. So once it's verified, a receiving report is created and distributed to the inventory control clerk and also filled accordingly. So purchase number 4 is updates inventory record. The inventory control clerk updates the inventory record based on the receiving report. So the updated inventory data is then reflected back to the store. So in addition to this process, we also observe important document flows such as the packing slip file and the receiving report file, which help maintain records for future reference. So to summarize, this DFD shows a clear 4-step purchase process that ensure items are properly ordered, received, verified, and also recorded into the inventory system. Okay, so now I will be explaining the data flow diagram of the cash disbursement system. So this DFD illustrates the workflow and data movement involved in the disbursement of cash to supplier after purchases have been made and goods received. So it helps to ensure that all payments are accurate, authorized, and properly recorded. So in this diagram, we can see there are 5 main processes involved. So for the first one is match invoice with verified purchase order. So the process begins when the receiving clerk provides a verified purchase order, and then the invoice received from the supplier is matched against this verified purchase order to ensure accuracy. So process number 2 is record invoice and generate voucher. So once the invoice is verified, it recorded and a payment voucher is generated. A copy of the matched invoice is also sent to the general ledger for financial recording. So process number 3 is updates the account payable record. So after generating the voucher, the account payable record is updated to reflect the pending payment. So process number 4 is prepare and mail check. So the payment voucher is sent to the finance division, which prepares the check. And then the signed check is then mailed to the supplier. So process number 5 is updated payment record. Once payment is made, the payment record is updated. So the check register is updated with payment details and the account payable file is closed. So records are also sent to the general ledger for the full financial reporting. So to summarize, this DFD outlines a 5-step process that ensure payments to suppliers are verified, approved, and properly documented in the company's accounting system.
My name is Nur Arsha Natasha binti Yusuf and my metric number is 307562, and today I will be explaining a flowchart of purchase system and cash disbursement system for the question. The flowchart of purchase system start with the material management division. The material management division initiate the process upon receiving a receiving report. They inspect the inventory record, and if the quantities are below the reorder level, they refer to the supplier's record and prepare a purchase order. A copy of the purchase order is sent to the supplier and the original purchase order document is retained. When ordered items are received, the packing slip is compared with the purchase order copy. If discrepancies exist, a report is manually prepared based on the packing slip and a verified purchase order copy is signed. If no discrepancies, the purchase order copy is signed directly. The verified purchase order copy is then forwarded. Inventory records are updated and inventories are moved to the store. A receiving report is filed and a packing slip also filed. The division also handles special production orders received from the production division by forwarding
a special order request. Then for the accounting division received the verified purchase order copy and creates a purchase order file. They also receive invoices from the supplier. The process involves reconciling supplier invoice details with the matching verified purchase order copy. Any errors found during this reconciliation are edited, and the transaction is then posted. This transaction information updates the general ledger master file and the accounts payable master file. A voucher register file is also created. The invoice is then forwarded to the centralized accounting system. Next, I will be explaining flowchart of cash disbursement system. This flowchart illustrates the complete process of cash disbursement and payment within an organization, detailing the roles and interactions between the accounting and finance divisions. In the accounting division, the process begins with the print program generating a cash disbursement voucher, which is then recorded in the voucher register file. A cash disbursement voucher copy is then created. The accounting division also received cash disbursement vouchers, invoices, and purchase order copies, all of which are used to close invoice file, indicating that the payment process for those invoices is being finalized. The cash disbursement voucher is then sent to the finance division. In the finance division, a cash disbursement clerk received the cash disbursement voucher. This clerk is responsible for preparing a blank check. The prepared check then goes through and approved and signed the negotiable step, indicating an authorization process. Once approved, the check is mailed to the supplier via postal service. Concurrently, information flows to a centralized accounting system where the transaction is recorded. This recording involves process updated program, which updates the check register file, the supplier record, the accounts payable master file, and finally, general ledger master file. The blank check is also sent to store after being partially prepared, likely for further processing or archiving.
The three possible strengths of internal control is segregation of duties among divisions. Justification for the strength is the purchasing, receiving, and payment activities are handled by different clerks and divisions. They minimize the risk of fraud and collusion by preventing any single individual from having total control over the process. The second strength is use of centralized accounting system. The Accounts and Finance Division uses a centralized accounting system that validates data entry and post-transaction automatically, ensuring accuracy, auditability, and efficiency. The third strength is control access to physical inventory. The justification for the strength is the inventory storage area is securely locked and equipped with the safe measures. Only authorized personnel are allowed access, reducing the risk of theft and damage to the inventory. The 5 weaknesses are manual-based procedures in many parts of the process. It is because reliance on manual records and stand-alone application increases the risk of data entry errors, inefficiency, and data loss or duplication. The second one is sole access to blank checks by cash disbursement clerk. It is because allowing one person to prepare and sign checks creates an opportunity for unauthorized or fraudulent payments without detection. The third weakness is no independent verification of receiving activities. The receiving clerk verifies deliveries without any supervisor or second person checking the accuracy, which increases the risk of undetected errors or fraud. The fourth weaknesses is lack of formal supplier evaluation process. It is because orders are made based on existing records without a documented supplier assessment, which may lead to dealing with unreliable or non-competitive suppliers. The last weaknesses is paper-based document filing. Filing documents by date or supplier manually can lead to misplacement, delayed access, and loss of important information in case of physical damage.
Hi, my name is Sajita and my metric number is 300522. Today I am going to explain about internal control weaknesses, risk exposure, and internal control procedure. This slide shows 5 internal control weaknesses and how to fix them. Manual process can cause error and delays, so using an ERP system and automation helps. Having one person control blank checks, risk fraud. We fix this by splitting the duties and securing checks. No independent checks and received goods can lead to fraud, so a second check and three-way matching should be used. Without supplier evaluation, we risk quality and delays. Regular assessments solve this. Lastly, paper document can be lost or damaged. So digital storage and proper backups are recommended. This control improve accuracy, safety and efficiency. Thank you.